Michael, planning for retirement takes a lot of decision making. Which decisions do investors generally get wrong?
Great question, Greg. I think the biggest pitfall is planning based on averages because guess what? Nobody is average. In case an example, replacement rates. The long-held rule of thumb around replacing 70% of your income, it's broken. When we look at Chase households, they're actually spending at the lower income range, 80, 90, even hitting 100%, and higher earners spending far less. So it's important to understand the answer to the question, what is my number? What do I need to do to get there?
And a lot of people right now are looking at their retirement accounts and they're getting a little scared because we've seen a sell-off over the past few months. Can you talk about how people should approach their retirement accounts when it comes to looking and saving for the long term?
Well, I think looking is part of the problem, as you mentioned, Greg. But look, it certainly feels daunting. But successful investing, it's not about trying to time markets. It's about time in the markets. And if you had missed just the 10 best days in the market for the past 20 years, your account value would have been cut in half. So when in doubt, zoom out, take a look at what you own to make sure your investments are aligned with where you are in your life stage. So if you're close to retirement, make sure you're diversified. If you got years or decades to go, then at that point, you want to continue to invest in your strategy.
And how often should investors change their allocations? So for example, over the last quarter, we've seen international stocks do extremely well, while US stocks have been volatile. So how often should investors revisit their retirement accounts? Should it be quarterly, biannually, annually? What should it be?
Sure. I think the question is not to invest or not. It's more, again, understand what you own, make sure you're diversified, make sure you're balanced. If you are overweighted US, take a look at international. If you're overweighted growth, take a look at value. So make sure that you're balanced because that's the best course going forward.
And how should investors, especially retired ones, think about income nowadays? Because for a while, you're better off in growth stocks. They just kept going up. But now, if you're saying switch over to value, you might be getting more dividends. Lately, we've seen yields move a little bit higher. Maybe you want to buy some bonds. Can you talk about people and their income when it comes to retirement?
Sure. I think you need to take a look at your spending and realize that spending is typically highest those early years of retirement because, look, you're on the go, you're traveling, you're crossing off everything on your bucket list. But it's also important to understand some best practices. So, for example, make sure you have enough guaranteed income to meet your stable or ongoing monthly spending needs. Or for anything else that's a nice to have, that's where you can look at other parts of your portfolio.
And then finally, what about claiming Social Security? Do you do it sooner or later? Is this a personal decision? What do you think?
Great question, Greg. When you claim makes all the difference in terms of how much you receive. So if you claim early at age 62, you're basically getting about 70% of your full retirement age benefit, 30% haircut for life. If you can wait until age 70, you're getting about a 24% increase. So the question isn't what is the right age to claim at? It's basically what is the most informed decision. So know the benefits and trade-offs ahead of time so that before you're in the moment, you can understand it. That's where an advisor can really help you navigate that.
All right, well, thanks for coming in and talking about it.
Thanks, Greg.